Here to discuss the latest rules surrounding bank reporting, I'm joined by Olivia Gaudin-Tempels of Antaes Consulting. Olivia, first of all, could you remind us once again about these new banking rules and how they'll impact everyone?
Yes, of course. Thanks for the invitation. Today I'm going to talk about credit risk and more precisely on non-performing and forborne exposures that are requested by the European regulator to be reported. So non-performing is quite an old concept, but the definition has been reviewed by the regulator to include all clients having a past due for more than 90 days. It means that yourself, if you have a bank account and an overdraft, after 90 days you will become a non-performing client. On the forbearance, it's more a new concept, and it includes all the restructured credit, all the clients who had financial difficulties and could not repay their credit and had to renegotiate with the bank to be able to meet again their obligations.
Right, so why is this necessary? Why is the regulator pursuing these changes?
Because the regulator is concerned by the low growth economic context and by the deterioration on the quality of the assets on one hand and on the increase of the impairment on the other hand. So they wanted to have comparable and harmonized data coming from all banks to be able to put those debtors under their scrutiny. And also the market themselves require to get more transparency on the doubtful debts. So the regulator hopes that this reporting will be able to contribute to strengthen the confidence into the banking industry itself.
So how will these new rules be implemented?
Okay, these clients, and the non-performing clients and their restructured credit facilities will have to be reported into the FINREP, which is the accounting reporting. It means that first you have to collect some data to identify all kinds of past due. Of course, depending on if you are operating in investment banking or wealth management or retail banking, those past due will be very different. And we can know that some banking federation regretted that the definitions given by the regulator were not precise enough. But yeah, first collect data. Then you have to manage those data, qualify the guy who fall under the non-performing, manage your blacklist. And then third, you will have to convey all those data from credit or operational IT systems to finance IT system so that they can be integrated into the FINREP. So at the end of the day, you see that it's all about data. Collecting data, aggregating data, and passing data to the regulator is becoming today the core activity of risk managers.
And lastly, Olivia, how will all these regulatory requests be handled at the same time?
Yeah, in fact, the first remittance date was at the end of 2014. So some information is already reported to the regulator, but almost all the banking federations said that it would take at least 2 to 3 years to implement and industrialize this reporting. And you are right to mention those regulatory requests with an S, because the regulatory calendar is so busy, it's almost impossible now to name all the regulation, all the reporting that are requested. You have Basel III rules, you have compliance rules with MiFID, tax rules. So the environment is very regulatory oriented. And today we make a focus on non-performing and forborne exposures, but there are many regulations. Unfortunately, sometimes they have been built into silo, so we can see accumulation. Sometimes we can also see negative interactions between some rules. Let's take an example. On one hand, you have to comply to CRD4 for Basel II, so you have an accrued demand on capital, but you also have to comply to liquidity buffer on the LCR. So you have a decrease on your return on investment, so your investors are not happy. And the industry business model is still also really under pressure. So this is really an open question. How many banks will be able to absorb all these new rules? What we can see is that some activities are no more profitable anymore. So we see some banks closing some activities and having a retreat, I would say, on their core market. So, well, we'll see. We'll really see how many banks can afford this and absorb these new rules.
We'll see. Olivia, thank you for your insight today.
Thank you very much.
And thank you for watching. Keep clicking back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.